Hi everyone and welcome to today's morning report with me, Richard Perry, market analyst at Handtech Markets for Monday the 7th of April. The handover that we've had from Asia is fairly disappointing actually, certainly on the back of this continuing weakness in equity markets following on from Friday's non-farm payrolls report. There was a significant sell-off actually in the US trading session, which resulted in a rather significant shift of sentiment. Show you here the VIX volatility index. Certainly there was a big turnaround there, big key one-day reversal on that VIX volatility index, where it hit a low for about a 10-week low, and then rallied strongly. So increasing volatility there, and that can actually also show very similar. Just watch out for all these lows that we've got here on this chart, very similar to the old highs on the S&P. So an inverse relationship on these two certainly, and there's a big key one-day reversal on that S&P now. So that would suggest that certainly the pressure is to the downside as we start off this week. It's coming in front of the new earnings season that starts tomorrow, so that is something that we need to also focus on, and I'll talk about that later on in the week. But certainly, as we move into the trading session today, Asian markets were weak overnight. The Nikkei was down over 2%. That came on the back of the strengthening yen as well. So we had a handover to the Euro session where the indices are sharply lower. The DAX is 1.2% lower. I'll talk about that in a minute. That's my chart of the day. And also FTSE is 0.7% lower as well. So very significant gains there. On the currencies, not so much really. The euro has actually found a bit of support in the early hours of European trading, and other major pairs which had been weaker have now turned round. The Canadian dollar is actually showing a bit of weakness though, but New Zealand dollar is up. That continues to perform well, and also the yen is finding a little bit of dollar yen is finding a little bit of support as well. So just a little bit of a reversal there of the early weakness in some of these major pairs. There's not a great deal of data out today, so maybe comments from Jens Novotny, the ECB board member, will be adding a bit of meat to the bones from the ECB's press conference last week. So we wait to see what he's got to say. He's going to be talking throughout this morning, so that could have an impact on currencies as well. But at the moment, certainly the equities are very weak, and that takes me on nicely to my chart of the day, which is the DAX. And a very interesting move here. On Friday on the DAX, we had a move that hit 97.2150, which was actually just above the high from February. So it's retraced the whole of that move now. So we'll now start to potentially talk. As I said, the weakness down over 1% at the open, gapped lower, strongly lower, and broken that sequence of higher highs. Interesting move in the fact that it's gapped lower. You've got that as the initial resistance now, 96.27. You need to be watching out for on that. So theoretically, gaps should get filled, but at the moment it's sort of come off a little bit from the lows, so maybe this gap will get filled in the coming hours, or maybe even tomorrow. But certainly you'd be looking at the moment as though this is a bit of a corrective outlook. Certainly with the stochastics rolled over, given a sell signal, so you're now looking out for the confirmation of that, which would be a retreat below the 80 line on the stochastics. Also the RSI is falling over as well, so maybe you're going to start to get a bit of a retracement on this DAX chart. Perhaps you'd be thinking about the 38.2% Fibonacci level, which is 94.12 of this move, so that could be an initial level, but also you've got the support around this 9500 level as well, which is a fairly decent old basis of support as well. So it's been used several times in the past, 9500, and as the basis of support and resistance. So it could be also a bit of an area there we could start to form a corrective low. But certainly at the moment the DAX is under pressure today, and looking on this intraday chart, it had been using this 55-hour moving averages as the base of resistance through the sell-off, became a base of support, and now it's back and broken strongly below that level. So that's at 96.12. So that, you could argue that that may become now the basis of resistance once more. So just watch out for that. But certainly the DAX is under pressure early on. It's broken back below several of these key lows from the last few days throughout this big uptrend higher. So that would suggest perhaps we're going to start to enter into a bit of a corrective phase. So what you'd be looking out for is a lower high below. As I said, you've got this gap down yesterday, from Friday's low. That gap comes in at 90. On that is 96.48. So there or thereabouts, you'd be looking at a lower high in this DAX chart for a potential corrective near-term sell. Anyway, I wish you good luck in your trading on the DAX today, and I will speak to you later. Thank you.